What's going on, option investors? My name's Henry, and if you're new, I'm continuing a series on options because that's my area of expertise when I was working at Goldman Sachs. And in this video, I'm going to explain to you how to perfectly execute covered calls so you can make consistent income. That way you can put your feet in the sand and just sip margaritas all day once you have that passive income coming in. This video is designed to make you stupid rich, so stick with me because covered calls are the simplest and the easiest way to make your stocks work for you and generate consistent income. You do need some money to do covered calls, but you really don't need a lot of money for this strategy like most people think. This is the strategy that most option millionaires use in their toolkit, and the sooner you master it, the better. With that being said, before I flood your pockets with money, if you appreciate my work in teaching you options, then go ahead and smash that like button for Uncle Henry. It makes me really happy and it keeps me grinding to teach you guys more options. If you're wondering, I do not have a Patreon or any sponsors or any affiliate marketing, nothing like that. I don't have any products. All I have and what I dedicated my life to and my daily time to is my weekly Option Income Academy, where I go live, I trade, I show my portfolio, and I do private training for the members over there every single day. The only way you can get into that, and I ensure that nobody gets scammed into something that isn't for them, is talking to a live coach from my American team for absolutely free. That link is in my bio below. Let's get into it. I had a conversation with a financial advisor that was managing just shy of $2 billion. This was back in college, and he was a speaker, and he was also an alumni telling a very select group of finance students how he successfully manages money as a financial advisor. Now, he said that he has been in business for 20 years and he manages some celebrity money. Talking to him was early in my option journey, and I was super excited to ask him how he uses options to make his clients a lot of money. Well, when I finally asked him his secret, the answer surprised me. He said that he has consistently beat the market and got his clients steady returns for nearly 2 decades selling covered calls. And I was like, that's it? And he said, yep, that's what he focused on. And since that day, I made it my mission to learn how to sell covered calls properly, and I've researched this strategy for a number of years now. Here is why and how you can implement this successful way to making consistent passive income. The reason you want to sell covered calls is because it's a huge win-win. In fact, after I explain to you everything that you need to know, it's virtually impossible to lose money with this strategy. So selling a covered call just means you own 100 shares of any stock and you sell a call against your position. It's covered because you have the shares, and the worst thing that can happen is you sell your shares at a higher price than you paid. I'm going to show you an example in 1 minute, but first, let's say that you buy a stock for $10 and you sell a covered call for $15. Well, only a few things can happen. Either the stock stays below 15 and you keep your premium and you sell a call option again next week or whenever that option expires, or it goes above 15 and you sell your stock for a big gain at $15 when your cost basis is just $10. The only way to lose is if the stock dramatically falls to say $5. But let me ask you this, if you're a stockholder, are you better off or are you worse off than the option investor? Really, I want you to think about it. Because if a stock drops to $5, the stockholder will lose $5. However, the covered call trader also loses $5, but he actually ended up collecting premium, so he also lost $5. Less the premium, so the option investor is actually better off than the stock trader himself. And that's exactly what I mean by being an option trader is oftentimes much safer than just being a stock trader. All right, with that basic knowledge out of the way, I'm going to show you a real life example. I'm going to do a covered call trade on NEO stock right now so you guys can see the exact mechanics, my full thought process, and so you can just implement this strategy for yourself. All right, guys, so we're gonna be taking a look at NEO stock and we're going to do a covered call trade. Now, I didn't necessarily want to make this trade because I've already fully filled my portfolio. This is going to be a trade that I make on margin. So I don't always recommend people trade on margin, but I've been doing this for 8 years now, so I'm fine with that. And also, I do think that NEO is selling off today, so it is a very good opportunity for me to open a covered call position. So I don't mind paying a little bit of margin interest here. All right, so NEO is under $44 per share. And if I take a look at the 1 month chart, NEO has been pretty much trading sideways, and that's actually a good thing for an option seller, especially because when you sell options, you're basically hoping that the stock does not go past your strike price. And because NEO has been trading in a lot of sideways action, I don't think that it's going to dramatically fall or dramatically rise in the near future. So by entering into a covered call position, I get NEO at a very good price in terms of long-term growth, but I also get to sell a covered call, which is unlikely to get exercised. And for that covered call, I'm about to get paid some money. So I think it's going to be a very fantastic trade. I'm going to show you guys the exact mechanics, but first of all, I have to decide at what strike price I'm going to sell a covered call. That's one of the most important things if you are going to do covered calls. Really, the only question is at what strike do you pick a covered call? And that's one of the most important things that you're probably going to learn from this video. So the first thing that I'm going to notice about NEO stock is if I look at the 3-month chart here on Robinhood, I don't need any crazy charting. I do sometimes go to Yahoo Finance or I might use TD Ameritrade, but here it's very simple. I'm going to look at the NEO chart. And in fact, actually, let me open up Yahoo Finance for you guys because I want to show you exactly what I look for. I know I've showed it in many different videos, but covered calls are really one of the bread and butter strategies that I have. So I want to make sure that I give you guys a full explanation and you know exactly why I'm choosing the strike that I choose, okay? So all I'm going to do is I'm going to click chart for NEO in Yahoo Finance. And the first thing that you guys will notice is that I have these yellow lines right here, which is called the Bollinger Band average. Now, the Bollinger Band just tells you what range NEO or any stock is likely to trade within. And I have it at 3 standard deviations, and I'm going to actually change it to 2 because 2 standard deviations will still capture like 95% of the movement a stock is going to have. So 95% is good enough for me. That's a very, very high likelihood. So as you guys will notice here, the Bollinger Band says at the very most that NEO is going to be about $47 per share. And at the very least, it may go down to $40. And that's going to be a very, very strong support. However, if you guys take a closer look here, this purple line right here is the moving average. So the moving average, it looks like it's right around $43 per share. So I would be very comfortable selling puts at $43 per share, but obviously this video is about covered calls. If you do want to see a put selling video, I have a fantastic one. I will put in the description below. But for this video, focusing on covered calls, I think we're pretty safe to go for around the $45.60 level, because if you guys will notice here, we actually had a little bit of a double peak right here. And again, even if the stock rises above the strike that you have sold for a covered call, it really doesn't matter because I'm going to be buying NEO stock at $43.60, right? Because when you enter into a covered call position, you have to buy 100 shares of stock. And because $45 is above whatever it is right now, $43.61, I'm totally happy to get rid of the stock at $45 because that's going to be a big gain in a short amount of time. So what I like here is on the chart, we have a double peak at $45.85. So that's probably what I'm going to be trading the call option on. However, I'm still going to do a little bit more research. I'm going to click into trade NEO options and I'm going to take a very good look at some of the Greeks, guys. So the Greeks are again delta, gamma, theta, and I'll do some more explaining in this video on what that is. As long as Robinhood ends up loading for me, then we're gonna go with that. All right, so I'm so used to trading options that I forgot the first step is actually buying 100 shares. So let's go ahead and buy 100 shares of NEO for $4,300 and roughly $61, okay? So I'm going to review and I'm just going to click buy. And now I have bought 100 shares of NEO. So now we have exactly what we need. We have 100 shares of NEO and we're going to go ahead and trade a call option. So the first thing you want to do is you want to go to sell, call, and today is August 6th, so I'm not going to sell a covered call for August 6th because, well, that gives you no time and there's very little premium. So you want to pick a sweet spot where you obviously give yourself some time. I prefer to go for weekly options because weekly options allow me to collect weekly income. It's very steady, it's very consistent, and I can adjust the position if it goes the wrong way for me. I can just go ahead and roll options. I have a rolling video in the description below as well. So rolling options just helps you adjust positions, but usually my positions are very successful, so I don't even need to roll any options. So the first thing I'm going to look at is August 13, which is exactly 5 trading days from today. So 5 trading days is a short amount of time, and if we take a look at the premium here, it is ginormous, guys. So the 44 strike right here has $179 worth of premium. Now, 1% of about our current price of 43 is about $43. 2% would be about 86, and you know, if you double 86, it's $172. So this is roughly 4%. This is actually over 4% return in a single week. That's a fantastic return. I mean, 4% in a week would be about 16% a month, which would be over 100% a year. So this is obviously a fantastic, fantastic trade. I'm going to go right for the money, and because when you're selling a covered call, if you go right for the money, that usually gives you the highest amounts of premium. If you guys notice here, the farther out I go, the less the premium becomes, and that's because option traders know that there's less of a chance for NEO to really rise and really go up to the strike. So the higher you go, the premium gets lower and lower. And obviously, the lower you go, the premium gets higher. But obviously, you would not want to trade or sell the 43 call because that doesn't really give you any upside on the stock. So the perfect sweet spot for me would be around $44 or $45 per share. If you're a bit more bullish, then you can go for something like 45 or 46 because that gives you opportunity for the stock to actually rise before you have to sell it. But for me, since I am using margin, I'm very happy to go for a very quick trade and have it be near the money because I still get to benefit. I still bought NEO for $43.70, so I still get $30 worth of upside, and I get to collect a very huge premium right here of 4%. So this is going to be a very profitable trade, and all you have to really do is you have to click here. You're going to sell the call. I'm going to click continue. I'm going to open up one contract. One contract is worth 100 shares. Again, I just bought 100 shares, so I'm perfectly in position to sell one call option. And right here, you guys can see there's a bid and then there's an ask. It says the bid is 179 and the ask is 181. It's fantastic because this is a very tight spread, which is very good, meaning you don't really lose a lot of money trading this. When there's a very wide bid-ask spread, that's not very good because you're not getting the optimal execution price, okay? And actually, let me quickly open this option because I promised you guys that I'm going to go over delta. So because this option is so close to the money, you guys can see that the delta is 0.49. So there's about a 50% chance of this option expiring in the money. Again, actually delta means two different things. It's the probability that the option will expire in the money. So there's a 50% chance that NEO will be $44 per share by August 13th. And also the second thing it means is that this option will move about 0.49 for each dollar move in the stock. So say the stock moves up $1, this NEO option is going to move by 49 cents. So if it's $10, it's going to be $4.90. If it's $100, it's going to be moving by $49, okay? So basically for each dollar move, the delta tells you how much the option will move. So it gives you a really good sense of how the option is going to behave. Now, gamma is probably a video of itself, so I'm going to skip gamma, but basically gamma measures how delta changes, and that's a whole video of itself. Now, theta is how much this option is decaying per day. And the really good thing is when you're selling options, you actually collect that data. So the reason it's a negative amount is because this option will be losing 0.13, or since each option is 100 shares, it's going to be losing $13 per day, which is a very good thing if you sold it, because that means every single day you're basically collecting $13 per share and $13 into your pocket. And actually this data is only going to increase. So as the option approaches expiration, this data will only grow and grow until this option is going to be decaying at pretty much a very fast rate on the very last day. And that's a very good thing when you're selling options, because right now you're collecting $13 per day, and by Friday, if the option's $50 and it doesn't hit $44 per share, you'll make $50 on Friday. So it really depends how much you're going to be making, but you can pretty much count on making $181 for this position if NEO does not touch $44 per share. And again, if it does touch $44 per share, on Friday, oh well, you get to sell NEO at $44 per share and still collect your premium, but also make some money on the stock appreciating. So either way, this is a win-win scenario, and we're going to actually open this position. So 181, okay, and I'm going to review order, and I'm going to place it. So I placed it and we got filled. We actually made $182. So we made over 4% return on this trade right here. So this is one of the most fantastic strategies that you can use. And again, the only real downside, if you actually call it a downside, is if NEO were to go to $46 or $47 per share, you will feel like you're at a loss. And sure, you are at a loss in terms of opportunity, but in actuality, you still made money. You still ended up doing really well. 4% in 1 week is a fantastic return. So if the stock goes up, you're in a winning position. If the stock stays flat, you're in a winning position. And if the stock does end up going down, sure, you will be at a loss, but let's say that you love NEO anyways. And if you're gonna hold the stock anyways, then you were going to lose money either way if it were to go down. But by selling a call option, now you have collected $182. You've given yourself some margin of safety, you've given yourself some cushion, and you have now collected income, which is honestly just a win-win in all scenarios. So with that being said, let's continue with the video. And a lot of people ask me, Henry, how can I follow your trades, your live portfolio? How can I be part of the options group? And for that, all you have to do is just click the link below and you watch the free training video, you put your email in, and then you book a free call with my team. The reason why I do that is so many people were getting scammed through my comments on Instagram and on Discord, and now I have an American team. They're option traders, they're coaches, and they help people understand exactly what I'm offering, from my live trading, my portfolio access, the training videos that I have, the insights that I have on the market, and everything else I offer in the Weekly Option Income Academy. That's the only thing that I have. I don't have a Patreon, I don't have sponsors, I don't have affiliate marketing. I don't do anything except for focus on my students' success. And for that, you get to talk to someone live, which is something I'm very grateful for, because it allows me to just teach option trading. And now my team is able to actually explain and get to know you guys before you join the group and see if it's a good fit. And that is a free call that you have with someone on my team. All right, guys, let's go out there, let's make some money, and let's get stupid rich. Give me that fist bump.
No one ever sees me, I'm losing every battle. No one ever sees me,